So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips, rocking and rolling here, 7th of April, 2019. No trade calls, recommendations, are responsible for their own stuff because we're here for educational purpose only. So, heading into a new week, in terms of the data counter, really the main day apart from, Brexit headlines, Washington, China, God knows what headlines we get on the wires. The key day is really Wednesday because we have the ECB and also FOMC meeting minutes. So that's really going to be the big event risk day, at least known unknown. Now, if we're going into this week in terms of the equities, clearly we keep on getting this trade deal being priced in. We've had fairly low volume, nothing too interesting, but if price prints, it's real, right? The print is real. So here we've got equities going for new highs. Everybody's talking about the magical 3,000 number, right? And here, clearly, as long as we hold this breakout, it's fairly bullish technically. Now, we'll have to see how we deal with these highs, but right now, it just looks like we've got grind higher after grind higher. And, the only thing being, two things I'd mention is that on the YM, what we had is we had that news out of Boeing at the end of the day. So we had a little bit of a smackdown. We'll have to see how that affects the open. I would expect that's a little bit of a overreaction. And the other thing to keep in mind is that the Russell, which as far as we're concerned has been really the non-confirming chart and still stuck inside that chop zone, is going for the break. So remember, the only one of the indices who hadn't taken out those key pivotal levels back to the upside is the Russell, and that's that 1600 level. So this is extremely important going into the week because you see how it's going for the break and it's trying to join everything else. So if at any point during this week you see the Russell closing above this 1600 from a day close basis, then you would expect the squeeze to be on across the board, and you would expect possibly 1650s to come very, very quickly. So there's a big risk of a melt up, right? Now, the big question is it going to get traction at highs? Is it going to be able to attract new buyers of highs at highs if it materializes? Or is it going to be the ultimate blow off top? I don't think you can't talk about blow off top here on the Russell because we're miles away from highs really, but that's the thing to watch out in terms of the other indices. Now, one thing which you do have to keep in mind, and something which we had been discussing, is that our base case actually going into and we'd seen this kind of action before. So if we've got the SPX here, we had that gap up at the beginning of the week, and we thought, well, this is a big gap up again. Once again, pricing in that China headline, we would not be surprised if this marked the high of the week, and then we just went all the way down to fill all these open gaps. Clearly, we were wrong on that. We expected at least this gap to fill early on in the week, but we just got the grind higher to go. There weren't any real interesting plays to try and get short simply because it was a one-way train all week. But going into this week, you have to keep in mind that we have a lot of open gaps to the downside. And again, we would expect these to fill rather quickly once we get some downside going. But as long as we get this low liquidity ramp, very little edge in trying to stay short. So here, what you want to watch as we're hovering back at these previous highs here, right, is how do we hold, especially early on in the week, above this level. Then the base case expectation would have to be for the squeeze to be on and for this to be on seek and destroy mission to take out new highs and press towards that 3,000 mark. Below, then we would have to expect a quick acceleration to fill all those gaps. Again, likely it'll be headline driven. That's the sad state of affairs, but it is what it is. That's the only thing you can do. In terms of single stock names going into this week, what we would be watching is number one, Boeing. Again, we're very bearish Boeing, so we were looking for that gap to fill. We got a little bit of lucky on that move. And then we said the percentage play was to flatten up, even though we'd expect this to print. So right now, going into the week, as far as we're concerned, the risk is clearly of some kind of attempt to try and fill that gap. But we are still, very high conviction that we're ultimately going to go and test these lows and trade sub 300. We just think things are going to get much uglier before they get better. And also the other thing you want to keep an eye out is on Tesla, right, which has the potential to spook the market. Now, I think we've seen a lot of headline flow coming through the weekend with a deal with Fiat, etc., Fiat Chrysler. So you might see an attempt to try and squeeze this, but ultimately, again, we still think there's a date with these lows, and ultimately they're going to break, and when they break, things will get ugly. We don't think it really makes sense to put on any new trades here, but we would be watching this very, very closely in case we do get that acceleration and in case it ties up with something else. Now, the other thing to keep in mind as we go through the major charts going into the week is crude. Again, we're stuck right here at this key weekly level, and we'll have to see how we trade around here. We've been looking at this as the 6250 essentially, and we tried to play some tactical shorts as long as we weren't getting daily closes above the 60 mark, right? But as we said, once we got that daily close out at the 60 mark, there is no point fighting this. Let it do what it needs to do. We'll reassess at the 6250, and that's pretty much where we are going into the week. So we would say daily closes above the 6250. There's clearly the risk of more squeeze action all the way back higher. 65 should be a hard nut to crack, but the way these have been trading, you really can't step in front of these. So if that gives, you'd have to be looking at the 70, but we still maintain that we're looking for some kind of tradable topping pattern here. We are in absolutely zero hurry to try and catch this to the short side, but at the first sign of trouble, especially on day closes below the 6250, we think there'll be interesting opportunities here. If you're looking at gold, again, base case is still bullish, but what we warned in the last videos, we said, watch out here because this almost feels like it's too good to be true. We wouldn't be surprised to see another smackdown. And indeed, it's just stuck here. The way, if you've been looking at gold and silver, it's just been stop hunt heaven. We've had these pukes in the middle of the day on no real reason. Just looks like they're trying to clip stops. They're just clipping the previous day lows and then they're reversing. So it looks like a lot of hanky-panky going on here. Ultimately, as long as this area holds, as long as this 100 DMA holds from a closing basis, you'd expect this to continue to try and stay bid. Naturally, it'll depend what happens across the board, but especially if you see this level go from an intraday basis, we have zero interest in trying to catch this unless you get a strong reversal or much lower, towards the 1250 or even lower. So again, not very interesting in terms of new trading opportunities. It looks like a lot of chop, and it looks like, it's just trying to take out weak players left, right, and center. No real edge trading tight here, and what our bigger picture view. So the bigger picture trades, those are in play. ZBs, what's happening on ZBs? Right here, we're hovering. Let's just look at it on the weekly. Again, a lot of people are going to be getting very angry discussing the merits of, fundamentally whether this should break up or down. We're just going to look at the chart, right? So in terms of bigger picture, this is still trying to hold this huge channel to the upside, right? And I'm going to refrain from making, again, any comments fundamentally. I'm just going to look at it technically, and the way this is looking is that any dip that can't get traction below this zone will still be bullish for a press higher. Day close below this 50-week moving average, then it could get very, very ugly very, very quick. But as long as this area holds, we'd expect this to try and play out. A very choppy zone, ultimately very, very choppy zone here. And last but not least, DXY. And again, this is going to have an impact, as you've got that yen stuck inside that broader big, 114, 112, 110 range as it's pressing towards those 112s, as you've got euro to the downside pressing that, around that 1.12 zone. It's just the DXY being stuck here. So really, what are the other broader flows going to do? Is Draghi going to want to come out on Wednesday and stab euro in the back and massacre it, and we get one of those days where euro just pukes and it's a grind lower day and it continues the whole week? Or is he going to be a little bit more accommodative and not want to completely kill it? We'll have to wait and see, right? Nobody has a crystal ball. Ultimately, this chart has been the same for a long time. Daily closes above 98. This will likely get the squeeze going, and it'll be very telling if it attracts new buyers on the break, because I think everybody and their grandmother and their pet hamster and their pet goldfish is looking for DXY to print above the 98 and to squeeze back above the 100. And if it gets gusto, then they're looking at the 103s, right? So the big tell is going to be if we actually squeeze above the 98, where everybody's expecting to see this accelerate, and it kind of does nothing, doesn't accelerate, right? Would that mean that it's going all the way back down? Not necessarily. It could just mean that we've got more of the same, which we're stuck inside this range, and it's not really getting any momentum because there's just so many things which aren't clear, most notably what to do with the Fed, what's going on in terms of rates there, and all the circus we're seeing in Washington. So again, it's I wish there was more to say, but ultimately, gold and the DXY and bonds have been kind of stuck. No surprise for us, because we said unless we got a bigger catalyst or a bigger something fundamental change, there's no real reason for them to get any traction to the upside or the downside. It makes a lot more sense for them to keep on trading in these broader ranges. And that's what's being reflected to a certain extent on the yen, and to a little bit of a lesser extent, but still on the euro. So we're in that wait and see market, which are painful to trade, right? If you look at the range on the yen last week, we had a couple of days where we're stuck in under 20 pip range for the whole day. It's just, very, very painful, but it is what it is. But what these periods tend to mean is that they tend to precede periods where volatility picks up again and we get some decent trading. But the most important thing to keep in mind, as we've been saying, is don't force it, right? If the market ain't moving, if you've got yen is stuck in a 20 pip range all day, there's no point trying to force it, because you're not gonna just break it out of range by yourself, right? And it's the same thing if you're seeing this action on the equities where volumes are anemic and you keep on getting these grind higher. It's just madness to keep on trying to aggressively fade it and pick a top. It's just silly, right? So these are periods where you have to keep your powder dry, understand the context, understand the levels, and be ready to engage, preserving both your Zen capital and your monetary capital, right? Having your bullets dry to be able to take advantage when things pick up. It's always tricky because they tend to either you're fighting it and you just get exhausted, or you're a little bit smarter and you're patient. But sometimes it's so boring that being patient means that you kind of fall asleep. So you have to stay patient but stay alert. Okay, that's the message going into the week. So I'll try and send out some more updates with more specific trade ideas and levels and update on some of the other ones we looked at. Hope everybody's going to have an awesome week. Talk to you guys soon. And for the guys on YouTube, thanks for following, thanks for sharing, and thanks for the guys who comment. Always very much appreciated. All the best, guys. Take care. Bye-bye.